Is Bitcoin mining legal in India? Miners still don't know when Anshul Dur got a 400% return on Bitcoin in 2016. The Noida-based entrepreneur jumped in joy and decided to enter the world of digital currency. He left his government job and incorporated a startup named Codcore to provide commercial mining facilities. His parents were baffled. Is crypto mining legal? How are you earning money? Fast forward to 2020, and is crypto mining legal? Is still a live question in India. The industry has been hamstrung by a lack of clarity from regulators and frequent clampdowns on mining operations. In March 2020, India's Supreme Court lifted the banking ban that barred banks and other financial institutions from facilitating any service related to virtual currencies. As a result, trading volume at exchanges like WazirX went up by 400%. Dur's parents have now developed faith in the crypto ecosystem. But it's unclear what will happen to the Indian crypto miners after the verdict. Will the government also lift the 2017 ban on importing ASIC machines for mining Bitcoin? The Supreme Court has given a green signal to the banking of cryptocurrencies, but mining itself, a key part of any country's early adopting cryptocurrency, is still under the cloud. Just recently, the industry was rocked by rumors of a new government ban. It's risky and bizarre to work in such an environment, said Dur. While Dur chose to continue mining in India amid the uncertainties, Bengaluru-based Akshay Bajaj, a co-founder of AB Nexus, a financial consultancy firm for cryptocurrency, quit mining when the government banned ASIC imports. The latest technology is required for mining, and when the import of machines was banned, we could not buy new ones, and eventually, the mining had to be stopped, he said. At the same time, profit margins fell in the post-2017 bear market, which led him to focus more on investing rather than mining. Mining Bitcoin is energy-intensive. According to an estimate by the Cambridge Bitcoin Electricity Consumption Index, the global activity consumes about 60 terawatt-hours a year. In 2017, the world consumed a total of about 25,000 terawatt-hours. Electricity costs typically account for a high percentage of overall mining expenditure. It's risky and bizarre to work in such an environment. Power shortages are one reason the government banned ASIC machines, said Siddharth Sagani, CEO of CREBACO Global, a Mumbai-based credit rating and research firm of blockchain. India suffers from a lack of electricity, with millions of people still without reliable supply. He also said the other reason could be the specific integrated circuit of ASIC machines, which is useful only for mining Bitcoin and can't be used for anything else. Nowadays, GPU mining is the only option left for the Indian miners, but it is not profitable and, even then, the legal status of mining in India is not clear. The language of existing laws doesn't help, said Pavitra Mohan Mishra, attorney at FinLaw, a Mumbai consultancy firm. Words like currency and mining can be construed as printing new notes or mining coins, which is a government prerogative and not for individuals. Obviously, printing a note is illegal. However, in India, the law is still not very clear about crypto mining, and that's the reason why in 2017-18, a few of the miners were imprisoned, and the cases are still going on, Mishra said. Mishra advises people not to mine until there are new regulations on cryptocurrency. Stay out of crypto mining in India. However, you can trade it. Jugaad Machines Dur, who claims to be among the country's earliest miners, has struggled to import appropriate mining machines. So he used an Indian Jugaad skill, a flexible approach to solve a problem, and manufactured his machine in-house. In 2016, we were not getting a motherboard, in India, which is very specific for mining equipment. I went to Bengaluru to buy a very high configuration motherboard, which is used for the medical equipment, he said. After the recent Supreme Court verdict, he wanted to buy ASIC machinery, thinking the road must now be clear. But he faced the same problem of importing the equipment. Some custom officials allow machinery and some reject it the moment they see the word digital currency. ASIC is not coming to India through the proper channels, he said. Another crypto miner, Shantanu Sharma, said there is a growing black market of mining machinery in India. The price of mining Bitcoin in India varies from state to state. For example, the price of electricity is lower in New Delhi, but the cost of real estate there is skyrocketing. In other states, the price of land is low, but power cuts are a hurdle. In India, electricity is neither cheap nor expensive as, on average, it is between 10 to 12 cents per kilowatt hour. In Russia, it is 0.085 cents per kilowatt-hour, and in Denmark, it could be 30 cents per kilowatt-hour. DER is using power generated by solar plants. With some partnerships, DER is using the power from solar plants via the grid, and the state government provides a 30% subsidy to domestic consumers who install solar panels. The plants are installed in states like Madhya Pradesh and Himachal Pradesh, as both have a favorable climate and better infrastructure comparatively. He claimed that the solar-derived electricity is half the cost of officially supplied power, at 0.04 cents per kilowatt-hour. Solar isn't a panacea, though. First, the initial cost of installation is high. Second, India's tropical climate is not favorable for crypto mining. And third, red tape, inevitably, gets in the way. If you are using a solar plant for mining, you will have to declare it and it's not easy, Sharma said. Armenia bound facing unfavorable conditions at home, some Indian miners have decided to set up abroad, with Armenia, in Central Asia, being one hotspot. DER is seeking investment from Armenia, the United Arab Emirates and Tunisia, and claims the government in Yerevan has a better understanding of crypto mining than the one in New Delhi. Also, Indian citizens don't need a pre-travel visa. Sharma has tied up with a government-recognized mining company ECOS.am in Armenia, which provides cloud mining services. Armenia is a free economic zone country where one can easily set up a company, tax and property rules are easier and the period of a moratorium is 25 years, said Sharma, who has decided to work outside India only. Sharma is educating people about crypto with a new YouTube talk show, which he says is India's first. He said increasing demand for digital currencies has allowed his Gurugram-based startup Inblocks to hire 7 people in the past month, even in the pandemic. Bajaj, of AB Nexus, is not planning to come back to mining as it is capital-intensive and focusing on investment strategies and portfolio management for clients in Bengaluru. The Indian crypto industry hopes India's central bank, the RBI, can collaborate with the Security Exchange Board of India, the equivalent of the U.S. Securities and Exchange Commission, to hammer out some clear guidelines. At the moment, the government seems okay with using blockchain for the payment system, as it may improve efficiency, but for tokens or cryptocurrencies. DER wants the government to break with this blockchain is good, cryptocurrency is bad approach. Lawmakers such as Subramanian Swamy, who represents the ruling Bharatiya Janata Party (BJP), have been advocating cryptocurrency, saying it's inevitable that India will more fully embrace crypto. However, Attorney Mishra said India is still afraid of the scams and frauds associated with the crypto sector, adding, I am 100% sure that the government would ban private currencies, ICOs and personal tokenizations. The recent news of Google and Facebook investing in the Indian market for digitalization has given hope to crypto miners as well. Last week, in a webinar, Subhash Chandra Garg, a former finance secretary who drafted the bill to ban cryptocurrency in India, proposed regulating crypto as a commodity. The organizers of webinar CREBACO Global and Khaitan & Co., a law firm, are now building a new framework about digital currencies in India, and it will be submitted in a month. We have worked with the governments of Singapore, Malaysia, Malta, Thailand, Vietnam and UAE about the regulations and policy framework. With that experience, we are now focusing on the regulations in India, said Sagani, from CREBACO Global. DER said a country of 600 million Internet users could be a crypto industry success story. The conservative approach of a blanket ban would be like throwing a baby out of the bathwater, he said. We will lose trillions due to reluctance of the government, and that means we are isolating a leading software country from innovative technology, he said. The big thing holding back India's crypto boom until recently, India's crypto industry had much reason for optimism. In March, the country's Supreme Court overturned a ban on banks working with exchanges, clearing a major hurdle. Then the coronavirus pandemic seemed to improve the business case for digital currency, with several exchanges reporting steep growth in users. Now, uncertainty is back. The government may be about to ban crypto altogether, according to media reports, and India's central bank has been unhelpfully unclear about its guidelines for commercial banks. There are dozens of unanswered questions, and startups are back to asking, what's next? The uncertainty is hard for crypto businesses such as the Sequoia-backed crypto exchange CoinSwitch. It launched an app on June 1 called Coin Switch Kuber, and has signed up more than 100,000 users so far, CEO Ashish Singhal says. It is so simple to use, he says, that his 65-year-old mother is able to buy and sell Bitcoin and check her portfolio. Despite this, when trying to open a business account, he received a rejection from a private bank. We were in touch with the bank for many weeks and prepared the required documents, but it ended up with a no, he says. The Reserve Bank of India, RBI, says there is no banking ban in place. It was forced to clarify the matter in response to a right to information request filed by Harish B.V., co-founder of the Unocoin exchange, on April 25. But Indian commercial banks are still waiting for further instructions from the central bank. A senior banker interviewed by the Economic Times said, "We will be guided by RBI's directions on the matter, and once we get clarity we will act appropriately." As banks, some of the concerns we had on cryptocurrencies were around security, use of money and traceability. Nishal Shetty, CEO of WazirX, an exchange acquired last year by Binance, blames a RBI edict issued in April 2018 that barred banks from facilitating any service in relation to virtual currencies. This communicated to the masses that crypto is a fraud, he says. He claims the trading volume of WazirX went up by 400% after the recent Supreme Court ruling, and that it could have been even better with clear guidelines from the RBI. The Indian government has a history of banning what it doesn't understand. Due to the lack of banking regulations, we aren't able to make most of it in the booming time of crypto, he says. To spread crypto awareness in India, Shetty began a Twitter campaign named #IndiaWantsCrypto. He starts his day composing a tweet on crypto each morning. A similar awareness program called DCX Learn has been launched by CoinDCX, another leading crypto exchange. It had 10 times its normal number of user sign-ups in the Q1 of 2020, leading CEO Sumit Gupta to start an online educational platform dedicated to blockchain and cryptocurrencies on June 16. Indian crypto has seen strong volume from women traders and youngsters from Tier 2 or -3 cities. Singhal claims that as per the current data, 52% of the trades are made by women on Coin Switch, and the youngsters from small towns are curious to know about alternates to the stock market and mutual funds. Shetty says many women support his #IndiaWantsCrypto campaign and ask questions about his startup. That was not the case 3 or 4 months ago. For example, social media influencer Akanksha Redhu has supported the campaign and helped escalate it in the conversation. The number of users from small towns has increased 155.5% in the past 3 months, he adds. India leads in other areas of software and IT development, but it lacks leadership in blockchain and cryptos. Crypto pros fear the lack of regulations would lead to scams and fraud, and they might have to face a blanket ban ultimately, which would be a big jolt to new companies. The trade body Internet and Mobile Association of India (AMI), which represented the crypto industry before the Supreme Court, wants to be heard by RBI and the government and make the policy collaboratively. Shetty wants the central government to act more like the Telangana state government, which is fostering blockchain companies. In the last 2 years, only $3 to $5 million have been invested in the Indian crypto industry. If we are late movers, our country will lose innovation and won't succeed, Shetty says. Sat Prakash Sharma, chief economist at the PhD Chamber of Commerce and Industry, says that for youngsters, crypto is a way to multiply money infinite times, and is not something meant for the wider Indian population. Pankaj Jain, a New York-based Indian crypto investor, says officials show a lack of awareness about the potential of digital assets and blockchain tech. The Indian government has a history of banning what it doesn't understand, he says. Gas the building to kill a fly. Singhal says the large unbanked population lives in India, and that is where the democratic setup of cryptos could bring people to the exchange. He gives an example of demonetization in 2016, when Indians were asked to hand in 500 and 1,000 rupee notes, which encouraged Indians to use services like Paytm or Google Pay. Now many people hardly carry cash to pay bills or to buy movie tickets. We are waiting for our demonetization moment when the RBI would give green signal to cryptos, and maybe after a decade, we won't be discussing digital currencies, Singhal says. Proof-of-stake chains team up to prove DeFi is bigger than Ethereum. Liquidity mining is coming to proof-of-stake (POS) blockchains. Anchor, the new decentralized finance (DeFi) platform from Terra, Cosmos, Web3 Foundation and Solana, is being designed to launch with a governance token reward. Version 1 is going live in October, according to a Terra co-founder. Anchor is a two-pronged platform for POS token holders. The system offers savings accounts and a lending platform, the bread and butter that made DeFi on Ethereum a multi-billion-dollar enterprise. We've been looking at ways in order to earn passive income on our users, for unused balances in unused assets, Du Quan, a co-founder of Terra and the startup built atop it, Chai, told CoinDesk in a phone call. Terra is a two-token stablecoin protocol that has risen to prominence in Korea as a payments provider known for saving users money. As Quan explained, Alipay rapidly gained market share by promising users a better savings rate if they held cash in their mobile app. Quan believes his team can craft a DeFi system that can produce a predictable rate of return that performs considerably better than bank savings. Further, if the trends so far hold, adding a liquidity mining element should bolster those returns. The new governance token is likely to be named Anchor, like the platform, Quan said. It will distribute over the course of 5 years and there will be no pre-mine for Anchor's creators. While it's launching with a small set of POS tokens, Quan said Anchor hopes to make it very easy for other projects to join by meeting a set of technical standards. We really imagine this closer to the Rosetta standard that Coinbase published, Quan said. How Anchor will work. One of the general trends of DeFi is, can you give consumers something that looks like a savings account, that is a yield-paying crypto asset? Zaki Manian, founder of iQlusion and a leader in the Cosmos ecosystem, told CoinDesk in a phone call. The first thing that has to be understood about DeFi is this: when someone deposits a token somewhere to earn yield, what they get back is a token. Users don't have an account like in Web 2, they have a wallet. Depositors get a digital note in their wallet after making a deposit, and they can as easily give that to someone else as hold onto it. Staking works the same way. POS protocols require their validators, which function like Bitcoin miners, to post a stake to do the computational work that blockchains require. Validators ante up to win block rewards, and their stake is at risk if they misbehave. Staking is DeFi, Solana CEO Anatoly Yakovenko told CoinDesk in a phone call. Composability between chains is fairly easy to build between proof-of-stake networks. Spreading the wealth one fear POS leaders have had is that a few big operations would dominate all the networks. The most obvious threat, major centralized exchanges. They can give traders convenience and staking returns, which is tough to beat. If there isn't a decentralized alternative to this, proof-of-stake is not a viable idea. This is the frontier, Manian said. This new token represents a future claim to yield. So, for example, if a Cosmos investor deposited 100 ATOM onto a staking platform advertising a 5% annual yield, they would get a token back for their deposit. If they traded that token in at the end of a year, they would get back 105 ATOM. Anchor calls these tokens that represent stakes B tokens. Much like Compound or Maker DAO, Anchor will let POS holders deposit B tokens as an asset on Anchor. These will serve as collateral for stablecoin loans. Initially, these are likely to be primarily stablecoins created with Terra. On the consumer side, users will be able to make stablecoin deposits in Terra and earn a predictable return. We now have means to turn Anchor into a turnkey asset for passive income, Quan said. Manian concurred. I am interested in this because A. DeFi and B. the potential for what seems like a wider Terra update. The Korea-based stablecoin project was first announced with a $32 million investment led by Binance in August 2018. In October, Terra reported $54 million of payments through its Chai wallet app. Era has risen to be tied for fourth place as a payments platform in Korea, Quan said. No small feat. For users, Chai is able to provide users with discounts funded by new token emissions, which get minted whenever demand starts to push the price above its target. Chai has already brokered a partnership for access to the Mongolian market. Quan said travel restrictions under COVID-19 have dramatically slowed the team's ability to access other markets, although Taiwan is the next step. It's another small country, but it has a lot of e-commerce activity, and Terra was created with e-commerce in mind. While Chai hasn't shown up in the U.S. yet, Quan is working on a partnership now that would enable U.S. customers to put funds into Anchor using fiat, over regulated payment rails. Further, its expansion to Solana reflects a larger strategy to expand Terra's footprint. We are building bridges to all the layer 1s that don't currently have stablecoins, Quan said.